What if I told you that a market crash could turn your financial life upside down in the best way possible? Imagine waking up one day to see your investments plummeting, your portfolio red across the board. It's a nightmare scenario for many, but what if I told you that this market crash could actually be the doorway to your financial freedom? Yes, you heard that right. In today's video, we're going to explore how the 2026 market crash could lead to opportunities that will change your financial landscape forever. First, let's take a step back and consider what a market crash really means. At its core, a market crash is more than just numbers spiraling downwards. It's a massive reset. A chance for investors to shake off the excesses, to clear out the inefficiencies, and to find the diamonds in the rough. Historically, some of the wealthiest individuals in the world have made their fortunes during times of economic despair. Think about it, the Great Depression brought forth financial titans like Warren Buffett and John Templeton. They thrived when others panicked. So, what can we learn from them? Opportunity. Now, I know what you might be thinking. But how can I possibly invest when everything is crashing? Well, let's dive into that. Consider this. During market crashes, stock prices are often discounted, sometimes massively. A company that was once trading at $100 could see its stock drop to $30. It sounds extreme, but many quality companies become undervalued during these turbulent times. This discount can be your gateway to acquiring assets at a fraction of their true worth. For example, let's take a moment to reflect on the 2008 financial crisis. Those who had the courage to invest when others were retreating had the chance to buy shares of companies that would recover and thrive in the later years. Apple, Amazon, and countless others saw their prices hit rock bottom just before soaring to unimaginable heights. This is the essence of contrarian investing, buying when others are fearful. But let's not stop there. We also have to consider the psychological aspect. A market crash can create an atmosphere of fear, driving individuals to sell off their assets at the worst possible moment. Remember the stock market crash of 1929? It led to the Great Depression, but what isn't often discussed is how those who held on or bought in at the bottom were able to amass incredible wealth in the years that followed. It's about the long game. As you ponder, ask yourself this: what if you could enter the market with a solid strategy in place? A plan that distinguishes you from those who allow emotions to dictate their financial decisions. This is where investing in education plays a key role. Knowing when to buy, understanding technical indicators, and analyzing market sentiment can set you apart. Picture your financial journey as a roadmap. You need to have the right tools and knowledge to navigate the twists and turns that will inevitably arise during a market crash. So, how can you stack the odds in your favor once the crash hits? First, build a robust watch list of high-quality stocks. These should be companies with strong fundamentals, ones that you believe will not only survive the downturn, but come out stronger on the other side. Then, consider dollar-cost averaging. Instead of investing a lump sum at once, gradually buy into the market over time as prices drop. This strategy can mitigate the risks associated with timing the market. It's like adding layers of protection around your investment. Remember to diversify your portfolio, too. Explore sectors that are typically more resilient during downturns like utilities, healthcare, and consumer staples. These sectors tend to lag less when economic conditions sour, helping to buffer your overall investment position. And let's not forget about real estate. If you've been mulling over investment properties, a crash could create favorable buying conditions. With interest rates potentially lower than before, now might be the opportune moment to consider adding real estate to your portfolio. Think about the sense of urgency. When everyone else is hesitant, that's your cue to act. Next, let's consider that pivotal emotional turning point I mentioned earlier. Recognize your fear for what it is, just fear. It's crucial to stay grounded and remind yourself of historical recovery patterns. Markets have an uncanny ability to rebound, and history shows us time and time again that patience is rewarded. So, the question arises, are you ready to seize the moment? And with that mindset shift, you'll begin to see opportunities lurking amidst the chaos. So, when the 2026 market crash arrives, will you be paralyzed by fear, or will you rise to meet it head-on? The choice is yours. As we wrap up, I want to leave you with this thought. While a market crash can seem daunting, it can also open doors you never knew existed. It can challenge you to sharpen your skills, rethink your strategies, and ultimately redefine what wealth means for you. So, gather your tools, educate yourself, observe the market closely, and prepare for the next chapter in your investment journey. When others panic and flee, you'll be ready to invest and thrive. Let me know in the comments what strategies you plan to adopt when the crash hits or how you've navigated past market downturns. And remember, every crisis holds a seed of opportunity. Don't miss out on yours. What strategies will you use to prepare for the 2026 market crash? Share your thoughts below, and if you enjoyed this, subscribe for more insights.